This is the S&P 500 one-month overview reading for February 2023. It's currently January 4th, 2023, 8:10 p.m. Eastern Time. The S&P at the time of this reading is or the SPY, I should say, at the time of this reading is 383.76. That's the S&P 500 ETF. So the overall theme and behavior for the month. We have a revisiting, in a period of sideways rotation, there's a revisiting of a recent past opportunity at a support level, usually in the midst of a sharp dip that stands out on would stand out on a 1 month chart. It's crossed with a notable decline to a prominent low or trough, a notable decline through multiple support levels. Maybe possibly even more than one. It looks like we might have two based on the correlations that I'm seeing. A correlation on the 10th and 13th to a sharp decline through multiple supports, and a correlation here on the 1st as well, as indicated by the yellow. Guys, if you don't know the color codes for Eso-Meta analysis, you want to learn how to do this yourself and how to read the information yourself rather than relying on me to interpret it, you can check out our book. We have a book out that teaches you how to do this. There's people that are successfully utilizing the system of Eso-Meta analysis after learning from the book. You can get it on Amazon, you can get it on Kindle, you can get it on our website, tarotfortraders.com. It's currently $27 on tarotfortraders.com, and it's normally $55, so it's on sale. There's no book with anywhere near the same detail as ours, and out of all of the books, there's only 4 tarot and stock market books that I could find, but out of all of those, ours is on a whole nother level. None of those were written by somebody who's an ex-Wall Street broker. Mine is the only one, being that I am an ex-Wall Street broker. Okay, and the behavior on the high side, there's a critical technical price level that's highlighted here. So it's already been established most likely, and so we'll be like revisiting this technical price level. Looks like there's a notable rally into it. Behavior around the lowest low, a sharp decline will take us into the lowest lows. A sharp decline will take us into the lowest low, and there'll be multiple headwinds pushing at the S&P lower. Let's take a look at how we did for January, or I should say December, because we're in January. Alright, so we're going to look at the December file, and the December S&P 500 1-month overview reading was created on October 10th, 2022 at 2:15 p.m. Eastern Time. That's this file here. And I recall that when we were going through the dailies, it became clear to me that the high was going to be on the 14th, and that sometimes the days will get pushed a little bit. And so we were pretty clear about the 14th ending up to be the highest high, and then we would have a low on the 19th, prominent low on the 19th, then move into lower lows or possibly the same lows. That's basically what we said. If you follow along on the lives and you follow along on the dailies. So aside from that, guys, let's see here. So on the 2nd, we had our first prominent low, and you can see we went from down here to opening up here, so that creates a prominent low. On the 5th, we had another one, based on us going lower and then popping out of it. Then on the 6th, we had a notable drop within a period of volatility. Notable drop within price swings, and an opportunity there in the midst of that to open up a long position. Looks like we followed the next day with this rallying to a resistance level and then declining from that resistance level with consecutively lower spikes up on the way down. Prominent move up and then back down on the 8th, right, as the art card would have us see. And it looks like bumping up against resistance on the 9th. Hard to determine really that, but then we had a prominent high here. This is where we may be off. We have a prominent high here on the 12th. We may be off by a day here, it looks like. It was a prominent high until the following day, but yeah, so we're off by a day there, and then it looks like we have another prominent high on the 14th, so off by a day. We've missed it by a day, it looks like. But in any case, we went from this high down to this low and then back to a high, so we did pick up on two prominent highs there, just a little bit off. And we do indicate, guys, that you have to keep in mind that give it a plus or minus a day here in there. And what you need to follow, most importantly, is the sequence of events, because the sequence of events is never wrong. All right, so then we had the high on the 14th, right? As expected, we ended up in a low on the 19th. Where do we go? On the 19th at a low, and then we rallied. Yeah, that works. We rallied out of that low. We had a lower low the following day as expected, and then a lowest low on the 21st. We were off by a day there. Looks like we had that crest on the 21st. We picked up on the crest, but the low actually ended up being on the 22nd. And it's interesting that double X ruin ends up, it indicates a lowest low in a lot of cases, so that's important to notate there. The double X in a lot of cases indicates a lowest low, where I've seen the single X indicate a highest high in a lot of cases. Not always, but in a lot of cases. So that's interesting to point out that it ended up being there. And there was a significant move on the 21st, on the 22nd, however, to distant resistance, and you can see the Lust card, significant move higher to reach for distant resistance. We were all the way down here and we went whoosh up there. And then we had another prominent high on a big move higher on the 27th to reach for a prominent high. I recall that possibly being not as big of a move to the upside as I thought. Looks like it ended up actually being like off the 28th to the 29th. So not my best work, but still, considering this was a month in advance and the sequence of events still very, very accurate. I'd probably put this in the low 90s, maybe like the high 70s, high 80s. Not my best work, but I'll leave that to Sarah to interpret, or to record the actual statements and see how many were true or false. I'd be interested to see. Got a lot of it right, just a few places where we were off by a day here or there. All right, guys, back to the February reading. So on the first, we have a prominent low. Looks like the Ace of Discs, there's a significant trade opportunity, may even be a day trade opportunity in there, which I'll get into in the paid version at the end of this video. And then on the second, so it looks like we rally out of a prominent low into the second, but based on the fact that the second is the halting of a bullish trend marked by a sharp decline through key support. So we might decline through the support. No, we wouldn't decline through the support, but there's a notable decline there through key support on a 1 month kind of scale, and then the following day we have a high there on the 3rd, in the midst of a notable amount of volatility. There should be some significant price change there, giving an opportunity to position oneself possibly in both directions as far as like a multi kind of month scale, like a long-term play, long-term swing trade. But there's a bit of position there, or a bit of an opportunity to position one there, and there should be a significant opportunity when we create resistance or create support out of resistance. We should visit a past opportunity, that recent past opportunity there. And I'm advised not to chase the high either. I'm advised not to chase the rally into the high here, as outlined by this ruin here. It would make sense that we'd have a high just ahead of the full moon, being that it's still we're still in Mercury retrograde's influence until the 8th is when we finally come out of that shadow post shadow period ends. So it looks like we have a prominent trough, a highest high and a prominent trough on the 3rd. On the 6th, we have a prominent trough towards the end of the day. In the midst of a period of volatility on the 6th, there's a sharp drop that'll stand out on a 1 month chart. Excuse me. On the 7th, out of a decline There's a notable move higher from the bottom of a range to the top of a range. And then on the 8th, we have 3 crisscrosses through the same price level, confirming a bullish trend. We may see another prominent trough there. That bullish trend doesn't hold. We have a notable decline standing out on a 1-month chart on the 9th, taking us into the lowest low price level here on the 9th. There's also, it looks like probably a support level that we meet on the 9th that's revisiting of a past opportunity. Looks like we revisit, even though we're in the midst of that decline, there's an opportunity to open up a long position, which I'll get into in more detail in the paid version at the end of this video. We still have another lowest low the following day, so we see that price level again, also a trade opportunity there. And we should see a significant drop here on the 10th and the 11th. I didn't highlight the 13th as a lowest low, but I'm getting a feeling that it may be a lowest low. So let me see this. Do you want to go down, buddy? Because we're declining, you know, there's an agreement between two leaders that's highlighted on the 10th, creating that sharp decline, and there should be multiple failed attempts to break through key resistance there on a 1-day scale. But then on the 13th, it looks like that decline continues with correlation to the ruin card there on the 13th as well. Do we see the S&P 500's lowest price level of February 2023 on February 13th, 2023? I got a yes. Interesting. So let me indicate that, guys, just real quick here. Oh, nice. It's already set up. Very nice, very nice. Yeah, because there's a sharp decline. It looks like that decline continues. There may be a bit of a holding pattern here on the 10th. Either that or the decline continues from the 9th. And it's important to point out that we have the notable decline on a 1-month scale taking us into the low, with also multiple failed attempts to break through key resistance on the days around the day of the low. And we can see we have multiple failed attempts to break through key resistance and the sharp decline into the low here on the 13th as well. We have we have a sideways S formation within a channel on the 13th. So what I mean by that is we go from resistance all the way to support, reverse, go all the way back to the same resistance, reverse, go all the way back to the same support. It's usually horizontal resistance, horizontal support, but sometimes it's at an angle. It depends on how strong the downtrend is. So we should see 2 declines with an incline in between. On the 14th, we have a near overbought crest. It'll stand out on RSI, near overbought crest. It won't be fully overbought, but near overbought, and we'll sell off from there, notably on a 1-month chart, followed by the creation of, or the establishment of support about midday on the 15th, out of which there's a notable move higher, and then the creation of a higher support based on the wealth card there on the 15th. On the 16th, we have bumping up against resistance kind of behavior. We may break through resistance, bump up against resistance some more, break through resistance. It's pretty bullish. Usually there's at least one point where we break through resistance there when we see the Valor card. But there's definitely a lot of bumping along resistance there. On the 17th, and it looks like we have a prominent crest there at the beginning of the day on the 16th. On the 17th, we have a period of sideways rotation that ends with a fast, sudden move higher, marking the end of that period of sideways rotation. There's that double X again. There's that double X again, guys. I wonder if the 17th is going to be a lowest low as well. I mean, I might. Let me see. Do we see the S&P 500's lowest price level of February 2023 on February 17th, 2023? I got a yes. Interesting. Hermes is moving my mouse around. Okay, so I got that as well. I'm advised to open up protection as well. In the midst of that move to the upside, probably open up lower on the 21st. We have the markets closed on the 20th. On 21st, there's a notable move higher, pushing the upper end of a range higher. Looks like a high midday. There's a trade opportunity in there as well. And it looks like a significant move to meet that push the upper end of a range higher. On the 22nd, we establish new support and push notably higher. We don't establish new support again at a higher level. Instead, there's a decline off of a crest or peak there on the 22nd. On the 23rd, we're bound by a range. Looks like it's the bottom of a range on the 23rd. And we revisit an opportunity at a support level that was recently a past opportunity. Like within 10 days, we're probably closer to 3. And then that's followed by a highest high, a rally into a highest high on the 24th. That highest high will offer, or that rally into the highest high will offer an opportunity to open up a short position. Again, I'll get into that in more detail in the end of the paid version. And then on the 27th, we have another prominent crest or peak midday, a notable decline off of that. The majority of the behavior, or there should be a significant amount of sideways rotation along key support. Into a crest and then a drop off of that, and then it looks like probably overnight on the 27th into the 28th, there's a notable move to the downside. We have a big move higher out of oversold territory on RSI, or to fill a previous gap down. The following month of March, we establish we established a solid foundation of support, and there may be something highlighting like significantly, like on a monthly kind of scale, significantly highlighting a male ruler of nations. When we look at the 1 year, guys, February we have that prominent crest and a decline back to a support level. Off of a prominent trough, there's a rally and a prominent crest, oversold territory around the high, and then we decline towards the end of the month and establish support there. We're bound by the bottom end of a range, so it looks like we probably, as expected on the 2023 reading, it looks like we probably see that same low that we saw in January again in February, with a prominent trough there at the end of the month as well. So still a lot of volatility going on, back and forth price swings and whatnot, guys. In any case, that's the February S&P 500 for February 2023. Stay tuned for the Q&A portion, where we get into the highest highs and lowest lows and extrapolate some extra price info. And then following that, there'll be the paid version, where we talk about the best trades and what we see in detail. If you're interested in the paid version, as far as the S&P 500 readings are concerned, we actually give that away. It's an example of what the paid versions would look like if you were to go to the website tarotfortraders.com and sign up for an Eso-Meta reading. Let's say there's a ticker that you want to see come out every month. You're looking for a way to support the channel. What you would do is go to Eso-Meta forecast under our services. Click here for your forecast. Type in the ticker and the company, or the ticker and the coin that you're interested in. Click on monthly subscription, $29, and subscribe now, and we'll get that out definitely before the 21st of the month. But the paid version comes out to you well ahead of the public version. Public version doesn't include the paid best trade information that we see. And most of all, guys, it's a really great way to give back to the channel for all the free work that we do. With that said, guys, stay tuned for the Q&A. And thank you for those of you that go ahead and do that. This is the Q&A portion for price level information. And for those of you that are interested, the February 2023 S&P 500 1-month overview reading. The shuffle file was created on December 15th, 2022 at 10:45 p.m. Eastern. That's this file right here. This is the S&P 500 one-month overview reading for the month of February 2023. It's currently December 15, 2022, approximately 10 p.m. Eastern Time. The S&P 500 is currently 3895.75. The S&P 500 is the S&P 500's highest price level of February 2023, taking place on February 3rd of 2023. Yes, it was the completion card. Is the S&P 500's highest price level of February 2023 taking place on more than one day of February 2023? Yes, it was the Ace of Wands. My thought is that it may be this right here. The Princess of Wands. Ace of Wands and Princess of Wands, often they can indicate a high. Not always, but they can. Is February 2023's highest price, is the S&P 500 highest price level of February 2023 taking place on February 24th, 2023? Yes, Magus card. Let me indicate that. So if you don't know, guys, what all the colors and shapes mean, we had to create a color code in order to visually represent as much information as we could, so that I could extrapolate patterns from it. So by putting information into colors, we were able to then extrapolate extra information and get a more detailed analysis. And what a translucently filled in green star indicates is the highest probable area for, or the highest probable timing for a highest high. It doesn't mean it's definite, guys, so never trade like it's definite, but it does indicate a very high probability here. Does the S&P 500's highest price level of February 2023 take place on more than 2 days of February 2023? No, it's a power card. Okay, does the S&P 500's lowest price level of February 2023 take place on February 3rd, 2023? Yes. I forget what it was, but it was yes. The S&P 500, does the S&P 500's lowest price level of February 2023 take place on more than one day of February 2023? I got the science card, yes. Can you see science card on here? That would be easy. Alright, so lowest price level, where can we have that? We could probably have that on the 9th, too. Is the S&P 500's lowest price level of February 2023 taking place on February 9th, 2023? Yes. So whereas a translucent filled-in green star pointing up indicates a highest high probability, the red one indicates a lowest low, most likely probable location or timing of. Does the S&P 500's lowest price level of February 2023 take place on more than 2 days of February 2023? No, the Tower card. All right, so let's say, do we have a prominent low? Does the S&P 500 have a prominent low on February 1st, 2023? Yes. And I got clairkinetically a yes as well. Where else? I don't need to get into all that. I just wanted to find the highest highs and lowest lows. So we have prominent. When it's not filled in, it's just a prominent. What does prominent mean, guys? So on this chart right here, This is a highest high. This is a prominent high. This is a prominent high. This is a prominent high, prominent high, right? This would be the lowest low that we can see on this chart. This would be a prominent low. This would be a prominent low, a prominent low, a prominent low, prominent low, prominent low, prominent. You know, they stand out, but they're not the lowest low or the highest high, basically. So hopefully that makes sense. And with that said, guys, stay tuned for the paid portion where we get into what we see as the best trades throughout the month of February 2023. It's an example of the paid version. Obviously, for S&P 500, we're giving away all of the information, but this is what you can expect if you were to order one of the 1 months of any ticker or crypto that you're interested in. You can expect that third portion to be the paid portion that you're paying for to be very much what this next portion is like. Most importantly, guys, make sure that you follow the rule of karma. The best way to follow the rule of karma, the 5% that you send back to the channel is through the PayPal donation link or through the Cash App donation link. And it's important to understand, guys, you need to follow the rule of karma every time you make money. You're profiting from information. You should give a piece of that away as a thank you and as a token of goodwill, because that's what will bring more in. And if you put it off, what you're doing is you're creating more of same. You're going to consistently put off. But even if you don't, what you're doing when you put off is creating scarcity mentality. You should be in abundance mentality, because that's what will bring in more money. Abundance mentality is about great gratitude and about understanding that when you give a little bit back, you'll get more. There's more coming, so nothing to hold on to, really. And with that said, guys, thank you so much for watching. I'll see you on the next one. Alright guys, so this is an example of what the paid portion of the 1 month subscription videos are. There's also a second tier subscription. It's much more pricey, guys, but what it allows you access to is not only early access to all the publics, but you also get all of the paid versions that are ordered by other people. You also get access to those paid versions as part of this second tier subscription. It's $555 a month, my friends. It gives you access to the paid trade information of every single stock that we do monthlies for, as well as early access to basically every video that we post on our website. So check that out if you're really looking to get serious about this information and utilize it as part of your trades. Again, everything will be going up in price eventually, my friends. So to grandfather in these prices, you want to do that now rather than later. Alright, so we have a day trade, it looks like, on the 1st. Looks like multiple failed attempts to break through key resistance. Let's see, on the 1st. Yeah, so looks like an opportunity midday at a peak where there's a reversal, an opportunity to open up some protection, close that protection at the end of the day. Also looks like an opportunity in the midst of a decline first thing in the morning to open up a long position, close that long position midday when you open up the protection. You should see a notable move higher followed by a full retracement of that move back down to where the big move higher started. There's a trade opportunity at this resistance level on the 3rd. I would open up a short position there or close out of long positions, which could have been an open, long position could have been opened here as well on the 1st and closed on the 3rd. I would close that I would open up that short position there on the 3rd and close that short position probably on the 9th. There's a trade opportunity on the 10th and the 13th as well. It's hard to determine exactly where it is, but my sense is that we probably see the lowest low again. So utilizing that information in tandem with, on the 10th, we'd want to trade around multiple failed attempts to break through key resistance on a 1-day chart. And on the 13th, we'd want to trade around sideways fluctuations with a bullish trend preceding a decline on a 1-day chart there on the 13th. But keep in mind, we see those lowest lows again. And then on the 14th, we have, there's no trade there on the 14th, but there's a trade, looks like, on the 17th towards a peak or crest there at the end of the day. If we don't see a lowest low on the 17th, I would hold off on this trade. But it looks like there's a peak or crest towards the end of the day. So there's like a day trade in there from a lowest low into a peak or a crest. But on a more of a swing trade kind of note, I would open up a long position here in the midst of meeting that lowest low on the 17th. You could close that long position in the midst of a notable move higher on the 21st, like midday, just before there's a significant sell-off from that move higher. Or even better, you could hold it if you got a little bit of, you have more risk tolerance and you can handle some price swinging stuff going on here. You could close that long position on the 24th there in the midst of a rally, and you would be looking to do so trading around a rally that sideways fluctuations with a bullish trend that precedes a decline. Also, another trade on the 27th involving. So you could trade around the high here on the 24th, open up a short position and close that short position when we're rotating sideways along key support on a 1 month chart after a bit of a decline midday there on the 27th. Those are the trades for February, my friends. Let me know how you do. Make sure you follow that rule of karma, my friends. The rule of karma is the whole point of this channel. I promise you this, the universe will not allow you to profit from this information if you do not follow the rule of karma. The weirdest things will happen that'll make it so you don't make that money. You could be right and still not make that money. I'm telling you this not as like, oh, it's because I don't want you to be disappointed. As long as you follow the rule of karma, everything in this channel will flow well for you, right? And the rule of karma, 5% of the profits forward, 5% of the profits backward to the channel, and then make sure whatever you spend that money on, you spend that money out of love. As long as you spend that money out of love, the universe is going to send it back to you tenfold in all directions. And the best way for you to go about that, following that rule of karma, which you must do after every profitable trade, my friend, not saving them up. Doesn't matter if it's $1, doesn't matter if it's $100,000. After every single trade, that 5%'s got to go back and forth. And it's 5% of the profits only, not the whole investment. But you could send that 5% here to PayPal. You could send that 5% to Cash App. Much appreciated. And you better believe we remember the names of the people that follow through on these things. It pays to be, karma pays, my friend. So stack those karma chips. And I'll see you on the next one.